Hi, this is lecture number 3 of Books of Prime Entry. Cash book. Now, what is a cash book? This book is used to record all the cash receipts and payments. There will come a type of cash book where cash and bank, both receipts and payments are recorded. Let's come now to the types of cash book. There are two types of cash book. The first one is single column cash book, where only cash receipts and payments are recorded. In two column cash book, cash and bank receipts and payments are recorded. Now we first come to single column cash book, and let's see the format. In this book, there is a receipt side which is debit and the other side is for payments which is credit. The cash book itself is a cash account where its balance will appear at the end. The entries inside will be posted to their accounts in Journal Ledger. We will practice a few transactions to record in single column cash book and then after posting into Journal Ledger. Here we go. The first transaction, business started with cash of $25,000. In this transaction, cash was received by business, so cash will be debited and is being recorded on receipt side of cash book. In narration, we will give the name of the other effect, like from where the cash came from. Of course, the cash came from capital, so in narration, we will write capital. Let's go to transaction number 2. The building is being purchased. Cash out, so it will be recorded in payment side with a narration that against building. The transaction number 3, purchase goods on cash. Again, cash paid, so on payment side, it will come as good purchase, so it will be against purchases or goods. The next one, advance salary paid. This is prepayment, and prepayment is an asset item. It will go on credit side, is payment side, and narration will be prepaid salary. The next example, sold goods on cash. Here, the cash being received will go to debit or receipt side of cash book, giving a reference as sales account in narration. Now, assuming these are the only transactions for the month of January, the book is being closed for the month of January. The difference between receipts and payments is known as cash balance in hand, which is $12,600 in our case. Here, the points to be noted. Single column cash book itself is a ledger account for cash, and it has its closing balance at the end, so only the accounts other than cash will be posted in Journal Ledger. Cash book receipt side is cash account debit and payment side is cash account credit. LF is ledger folio or a reference of page number where that transaction has been posted in general ledger. The accounts appearing on debit side in cash book will be posted in their individual relevant accounts on credit side in general ledger. And the accounts appearing on credit side in cash book will be posted in their individual relevant accounts on debit side in general ledger. Now we come to the posting. You can see the capital account here and sales account are being credited as other effects of cash receipts. Here the accounts appearing on credit side of cash book are being debited in their individual accounts. Building increased, so debited. Purchases or goods increased, so debited. And prepaid is also an asset which was debited as increased. Now we come to the other type of cash book, which is two-column cash book. And this is the format of two-column cash book where cash and bank both columns are there. A simple way that cash receipts and payments will go to cash column and bank receipts and bank payments will go to bank column. Let's have some activity. Owner starts business with cash and giving a check as well, which will increase company's bank account. Both cash and banks are debited here in receipt column, giving a narration capital. Example number 2, deposited in bank. You must understand a point here that when there is this sort of transaction where the effect is bank is increased and cash is decreased or vice versa, it will be recorded on both sides accordingly with a symbol C, as you can see here. Symbol C in folio column, which shows it's a contra entry. A contra entry will not be posted as this cash book itself is a ledger account for cash and bank. So here bank increased when deposited cash and cash decreased on credit side. We come to the next example. Office table bought paying check. Bank has been credited with narration furniture account. If we go to the next one, again a contra entry. This time cash increased and bank decreased. Example number E. Cash sales means cash receipt through sales. So it will come in the receipt side having a narration of sales account. Machinery purchased on cash. It's a cash payment as cash decreased. So it will come on the credit side or the payment side of the cash book. Now here also, we must know that the cash book after that, assuming that there are only these transactions in the month of February, so the cash book is being closed. The cash and bank receipt sides will sum up, and difference of cash and bank total will give the balance in hand for cash and bank. So right now the cash balance or cash in hand is $14,300 and the bank balance is $9,300. Now, points to be noted here. Two-column cash book itself is a ledger account for cash and bank, and they have their closing balances at the end. So only the accounts other than cash and bank will be posted in general ledger. Cash book receipt side is cash and bank accounts debit, and payment side is cash and bank accounts credit. LF is ledger folio or a reference of page number where that particular transaction has been posted in general ledger. When a single transaction affects both cash and bank, one will be recorded on receipt side and the other one will go to payment side. This is called a contra entry, which does not need to be posted. The symbol is used as C in ledger folio. The accounts appearing on debit side in cash book will be posted in their individual relevant accounts on credit side in general ledger. And the accounts appearing on credit side in cash book will be posted in their individual relevant accounts on debit side in general ledger. Now here is the posting. The capital account and sales account both will be credited. The capital we received in cash and bank. So capital account will be credited and sales account will also be credited. Then comes the furniture account and machinery accounts. They will be debited as there was increase in furniture and increase in machinery. Thank you and see you in next video.